the Fed will do anything it takes to make sure the labor markets continue to grow from here on out, especially after a very disappointing result.
It seems unlikely that the labor market will be a source of elevated inflationary pressures anytime soon.
Now, this feels like 2020 when the Fed injected a ton of capital into the markets. Individuals were getting checks to stay home, PPP loans, hundreds of thousands, millions of dollars that people were taking, investing in equities, and that had a tremendous impact, very, very positive reaction on the market, and we expanded to a level I don't think anyone was able to imagine.
If tech is in a good place, and then we get Fed cuts, I think it allows the overall market to expand.
I think Tom Lee's a very bright analyst, definitely someone you should follow. He has a very sharp view of the macro perspective of the stock market. Go and check out his predictions for a year-end 2023 on SPX. Blew it out of the water, not even comparable. And he said the same thing 3 weeks ago when everyone thought the world was going to end.
We viewed this ultimately as being a growth scare, because we didn't think the U.S. was entering recession, which a lot of people thought after that jobs report. But markets showed a lot of resilience since then. I mean, the fact that we snapped back so sharply is showing you how strong this market is.
And from that point, the markets rifled up, SPX almost 10% following August 5th, clearly being able to stand alone, that confidence and that perspective, and to watch everything react exactly the way he envisioned it. Very, very impressive. Again, when the mainstream view, when everyone's calling for a crash, he's sitting there and saying, no, this is just a growth scare. We have an incredible rally coming. And that brings me into NVIDIA here. I'm not concerned with the sell-off. It's down about 7 to 8 points in after hours. Earnings was fantastic. They beat revenues, EPS, and guidance. So there's no logical reason as to why the stock would stay down long term. I see it as an opportunity to accumulate and go long.
If you could guide up, call it 1 to 2 billion with a delay in terms of where the trajectory here, I mean, you're going to start looking at what ultimately will be $5-6 earnings power for NVIDIA when you look out year. This is the final piece that shows that this AI party we've talked about, it's 9 p.m. and it goes to 4 a.m.
Okay. He believes this AI revolution and 1995 moment is just the beginning in tech. He claims it's 9 p.m. in the AI party that we see lasting until 4 a.m. with this tech bull market raging through 2025. So I'm very optimistic overall. I think there is a handful of analysts that stand alone. They don't follow the pack. They don't give you bad information. Dan Ives, Tom Lee, definitely two analysts that should be on your radar, no doubt, when it comes to the tech, large, and mega cap space. But now I want to give you a quick breakdown here of NVIDIA, the key levels that you should know. I'm focusing on 115.89. The reason why is we're taking 2 points. The little flash crash we had August 5th, the low there was $90.69. We then go all the way up to the high on June 20th, 141.09, and then we get percentage pullbacks from that high. Now, in this case, the 50% is this pink line. It's very common for stocks to bounce at this range, so we want to see it hold the 50. If we break this down, we could probably see 110, and then we have a pretty big range in between. So we don't want to do that. And I honestly don't see that being realistic, but I do want to give you the ranges. 101.50 and then $98 would follow. Before we get into a controversial topic, I just want everyone to appreciate the gains of NVIDIA over the past few years. Now, year to date, we're up 153%, 5-year up 3,000%, and all-time 306,265%. This is absolutely insane. And when you really take a step back, you understand that this is trading very close to all-time highs. There's not a bad report. There's no negative news. There's no stains on the company. This stands alone. No one's touching NVIDIA, and it's going to be an absolute monster stock. Do I dare say 10x potential?
If it's AI related, that could mean NVIDIA's revenue could be $1 trillion by the end of the decade. And NVIDIA's revenues are 100 billion right now. So NVIDIA itself could be a 10x.
Many analysts have a conservative price target of over $200 for NVIDIA, and I definitely do think it stands alone. It's the big dog, and that's not unrealistic by any means. Next, I want to give you a quick update on SMCI. The first video we uploaded on this channel, we told you to stay away. We did not like it at $600. I felt it was completely overvalued. The margins were at 4%. They are earning less. It just did not make any sense. Did not instill confidence from me looking long term. Today, we saw a Hindenburg article came out. It was a smear campaign talking about the company's fraudulent past. I'm not sure if that correlates to current day, but it was not a good sign to see SMCI delay their filings. That indirectly confirmed Hindenburg's bias. And again, just more lack of confidence, uncertainty, fear, panic. And we saw that come out in the liquidity today. Traded all-time high daily volume, 36.8 million shares, down 19%. It's down almost 40% in the past 5 to 10 trading days. This is absolutely brutal. And again, it's just getting worse and worse from SMCI. As we look back from February, March, the stock was trading north of $1,200. If it is true that they are fraudulent, if they're cooking the books, it could easily fall sub 300, meaning we could have another multi-hundred point spill. Now, I want to give you a different angle here. Remember, the whole world, nearly 100% of the people are pricing it in. Expectations of rate cuts, that is what everyone is anticipating. I want to fade that expectation because Powell stated,
The timing and pace of rate cuts will depend on incoming data, the evolving outlook, and the balance of risks.
Now, of course, that's the politically correct thing to say, but the Fed has a reputation for making poor decisions, silly decisions, and not being very timely with those choices. And it would not shock me, especially after the reaction here where the markets are exploding, that we continue to run a lot of bullish momentum, high expectations going into September, and then the Fed could sit there and say, you know what, everything's great. The market's not feeling the ripple effects of the softness in the job markets. We're not panicking. We're not worried. And they don't decide to cut rates. And that could have a major correction, major pullback on the markets. So we always want to keep an open mind, expect the unexpected, never get married to one outcome, and more importantly, never blindly follow the masses, or else you're going to get ran over like the masses. There's a reason why it's always said 99% of traders lose and they're unsuccessful. Because again, if you're all collectively moving, panicking, being controlled by the mass media, by these big accounts, then again, you're going to lose just like everyone. And we've made very bold predictions in the past, especially going back to September, stating very clearly, PSA, the market is not crashing. Follow the money, not the narrative here. Pretty much called the bottom, and we melted up. All the major indexes went to all-time highs. SPX broke 5,000, 5,200, 5,500 plus, and has continued to hit all of our price targets over the past months and years. So I feel very confident with my macro view of how things are headed, feel very dialed in, and it does not phase me when you have these little moments in the bigger view. 3 weeks ago, August 5th, the world was ending according to social media and FinTwit here. Everyone was bashing, fear-mongering, people sell your positions. Here's the beginning of the bear market. Japan and the carry trade is going to wipe us out. I mean, you heard it all. I mean, the bear narrative was absolutely incredible. I mean, people really got shaken out of massive positions here. Take a deep breath. There is no reason for this to be the world-ending narrative. This is very healthy. This is actually needed. And if you really look at a SPX chart year to date, which we'll show you in a moment, I mean, it's ridiculous. I mean, there was like no pullback. The stock was just going straight up. And stocks don't ever go straight up, right? They have to correct. So this was very controlled. It seemed very managed, like it was even needed. It was healthy. It was necessary. It was almost like long overdue, in my opinion. And that is the confidence and the real perspective, whereas people are not paying attention because they don't really do this. They just follow blindly. They're seeing one event in one piece of time, and they're not really understanding the context behind it. And that's why, again, if you listen to those people, you are down huge.